Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of August 12th through August 16th, where we'll try to help you make money trading as stock market volatility comes back. So again, this is part one of our weekly trading game plan for August 12th through August 16th. Again, we'll try to help you make money trading as stock market volatility comes back. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for August 12th through August 16th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our Google Documents notes contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, trading ideas for the trading week, and you can find a direct link to this Google document in the description box below. We store all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes for this week, as well as previous weekly trading game plan notes. And you can find a direct link to that publicly accessible Google Drive folder also in the description box below. Welcome, Ellen Krantz. Thank you for joining us in the chat today. The Crow, good to see you all. Hope you had a good trading week. I know it was very volatile, and we'll talk a lot about that and how we can hopefully make money trading, again, as stock market volatility comes back. Welcome to Ricky Khan. So let's look at how the markets ended up on Friday. Welcome, Fairchild. Thank you all for joining us today. So we'll see markets were again pretty choppy, pretty volatile on Friday, kind of oscillating around the 0 point. All the major indices did come out with a slight positive for Friday. So the Dow was up 0.13%, NASDAQ 0.51%, S&P up 0.47%. Again, you could see the just oscillation around the 0 point. Also, something I wanted to point out is we've seen several reversals right around like 11 a.m., 1 p.m., Again, a lot of volatility, so we've seen some run-ups and then rollovers, and it's hard to tell, where it's going to end up during the day. Again, a lot more volatility. So again, we see a pretty even split between advancers and decliners, 56% advancers, 40% decliners, only 30% new highs, 67% new lows. We've now only got 40% of 41% above their 50-day moving average, almost 59% below, and 58% above their 200-day, 41% below. So again, pretty 50-50 bull bear, and again, a lot of volatility, a lot of oscillation during the day. Welcome, Douglas PC. Thank you for joining us. Hope you did well this week. So again, Friday, we see really the indices, as we'll see in the histogram, etc. It was really mostly driven by the Magnificent Seven. Most of the Magnificent Seven were up for the day. The weakest sectors, some semiconductors were weak, some healthcare, industrials, etc. But again, the indices primarily being driven by the Magnificent Seven on Friday. Some of the news, see growth is finally showing up outside tech mega caps. Stock market rout gave investors a scare. So again, we'll talk about the spike in volatility we saw on Monday. Roller coaster week. Ends wild week, right about where it began. So again, with all these oscillations, with all this volatility, the indexes pretty much ended the week where they started. Stocks closed higher, clawing back much of the week's losses. So again, a lot of volatility, but no real progress either way. Saw oil break above 75. Now it's got good support at 75, probably resistance at 80. Oil's been oscillating between 70 and 80 for a long time. Saw natural gas bounce off of 2. Seems to be trending up now. Gold broke out above that 2450 levels, now at 2470. So we'll see if it retests that 2500 level. Right now, the futures are showing up slightly on all the major indices, but down on the Russell. Again, we'll talk about the yen carry trade. Again, we saw considerable volatility in the Nikkei and the Japanese market related to the yen. And right now you see it's back down about 146 USD to yen. Also a lot of volatility in the bond yields, bond rates. So we saw, 1% plus moves in either direction through the week. So again, another opportunity you can make money trading volatility is also in the bond market as well. We can see right now the inversions kind of come off between the 5s and 10s. 30 years back up over 4.2. I think it was down around 4.1 or so. I don't think it broke below 4 this week. Let's look at the indices themselves. So we see, again, a lot of discussion, they pretty much just ended where they began. So just a lot of volatility, a lot of chop. We can see the Dow still sitting below its moving average, testing that moving average, bouncing down. Again, IWM weaker, bounced back up to about that moving average, but again, unable to break it. Bounced off the longer term moving average, so you can see those moving averages are providing support and resistance. So again, probably more chop between those moving averages. Qs broke slightly below long-term moving average, got some support there, bounced back up as we'll see in the futures. Looks like it's trying to fill that last gap that we saw after Monday. Same thing with the SPY, so didn't quite make it down to its moving average, bounced back up. Again, we'll see it looks like it's trying to fill that last gap. Just a quick reminder, you can find these screeners for the major indices and the technology components, also in the screeners sheets of our ETFs and Watchlist Google Sheets as well as in our notes documents. In terms of the technology components, again, these are all the leverage longs for the technology components. When we get to ETFs, we can also look at the leverage short inverses of these. So again, great way to trade, make money trading this volatility, particularly in the technology sector, is by using a short-term trading, scalping these leverage long and shorts. So you can trade either way. So we see, again, big bounce in the FANGs, had broken down below its moving average, bounced back up to recapture that near-term moving average. Looks like it's, again, filling that gap. So it looks like it bounced right about where that previous low was. So those are good markers to see where the support is. And again, probably get some resistance in those gaps. ARC, again, bottomed and bounced, not quite filling that gap. Biotech, oscillating between its moving averages. So again, a lot of short scalp opportunities between those moving averages. Semiconductors, probably the weakest of the components, dropped down, bounced back up. Looks like it is trying to recapture that previous low. So that would be a pivot point right there. Broader technology, again, broke down below that pivot point, below its previous lows, and then bounced. So again, buy the dippers, particularly the FANG stocks. And we talked about the NASDAQ. It's, trying to recapture that longer term moving average. So again, these are all the leverage longs. And again, we have the leverage short counterparts for all these in our ETF Google Sheets, so you can use those to trade the short, trade the bounces using the longs, make money, short-term day trading, scalping, etc. So I hope that all helps. Welcome, Cindy Osborne. Thank you for joining us. Hope you all are doing well. Okay, let me grab a quick drink and we'll look at the group, sectors, and industry breakdown. Okay, we'll go look at the groups and sectors and industry breakdown. Just a quick reminder, as I put up in the banner, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. So if we look at the sectors for Friday, we can see kind of a dichotomy. We had technology made a rebound, communication services, again, mostly the Magnificent Seven. Financials made a bit of a rebound. Just highlight the comment from the Crow. Again, we'll look at these and we can look at these in our ETFs Google Sheet, but a leveraged pair of ETFs to trade volatility in the financial sectors is FAS long, FAZ short, and we'll look at these various pairs. You can trade volatility of the various sectors groups in our ETFs Google Sheet. For the week, again, kind of a dichotomy. We had technology and energy and financials the strongest, utilities, defensive, and materials the weakest. However, for the month, utilities and real estate and defensives were the strongest in healthcare. So again, for the month, very defensive, flight to safety type of bent sector rotation. But short term, again, we got those buy the dippers bounces in technologies, communication services. So again, fueling further volatility, the buy the dips, rebounding on technology, and then rotating back to defensives. So for the month, technology and communication services pretty weak, cyclicals weak. So again, for the month, much more of a safety, flight to safety, defensive bent. So if we look at industries, we'll see we had a rebound in gold and silver we talked about. Again, rebound in the REITs, bond yields declined. So the real estate REITs rebounded, the energy commodities rebounded. Again, oil back up over 75. Weakest sectors, airports, auto, trucking, solar for the week. Again, utilities, real estate, energy, strong, some rebound. You see uranium rebounded a little bit for the week, but again, for the month, it's been trending down. Aluminum up, oil up a little bit. Some REITs. Copper still down, kind of downtrending. We'll see if it's found a bottom. Solar, steel. Again, we'll look for some opportunities in some of those areas. Gold down for the month, silver even more so. Again, for the month, REITs, positive, utilities, some oil, some energy, again, REITs, negatives, gold, steel, again, commodities, some REITs, coal, copper, very negative for the month, silver, very negative for the month, aluminum. Again, we see uranium, again, very negative for the month and just had a recent rebound. So again, we'll talk again tomorrow about opportunities we're looking at in uranium and some of these other areas. Okay, we'll look at the economic data from last week and talk about the upcoming economic data and some of the additional catalysts for additional volatility in the market in this upcoming week. Just a quick reminder, as soon as the important economic data comes out or important economic news, I try to capture it and post it in the Surf the Markets channel in our Discord. Our Discord is free to join. We'd love to have you join us in the Discord. Again, great source to get near real-time economic news. Also talk about how to make money trading with your fellow traders. So just to show you as the important economic data comes out, try to capture it from investing.com, post a screenshot, post the raw data. Also as inventories like natural gas, oil, capture that from BinBiz, post that in the Surf the Markets channel. And again, any other important economic news that comes out, try to post that in the Surf the Markets channel in our Discord. So again, love to have you join our Discord, get real-time economic data, help each other make money trading, help each other succeed in your trading career. So last week, the only real highlight that I had was the jobless claims data on Thursday. So we saw initial claims was lower than expected. So maybe some, bottoming out of the unemployment. So that's a, positive. The last non-farm payrolls, the market kind of got a little bit of jittery, and that's probably what caused the downturn late part of what caused the downturn late last week. So again, this fueled, more upside late this week. Continuing claims a little higher than expected. So fewer layoffs, but people are finding it a little bit more difficult finding new jobs, and the 4-week average went up a little bit as well. So again, some weakening in the job market, but not dramatic like we saw last week. I think that'll be important again this week. So we'll open up the investing.com calendar. We'll go over some of the rest of the data in a minute, but just some highlights, some potential catalysts for further volatility in the market that we'll talk about this week. As we've got Tuesday is PPI data, Wednesday is CPI data, Thursday is jobless claims data, and Friday we've got Michigan consumer sentiment data. So plenty of potential catalysts for further volatility in the market. And again, we'll talk about other potential catalysts for further stock market volatility as part of our strategy for this week. Okay, just waiting for the investing.com calendar to load. While we do that, we can also talk about upcoming events with the FOMC. So again, we don't have another FOMC meeting until September 17th and 18th, and we'll get a dot plot, another SEP at that time. But we do have the Jackson Hole Economic Symposium, August 22 through 24. So again, people will be listening to what the Fed officials have to say about the strength of the economy, job market, etc. And I put a link again to that symposium in our notes. So it looks like investing.com's having some issues right now. See, okay, I got it to reload. We'll look at some of the other data from this week. So ISM manufacturing, a little stronger than expected. So again, probably fueled some further upside after the volatility spike on Monday. Tuesday, import-export, not a lot of crude oil stocks up, but much less than expected. Mortgage rates now down to 6.5, so that's good for the housing market. Again, we saw a lot of volatility in bond yields. Crude oil inventories negative, so again, we saw that bounce up in oil prices. Also, we had the Biden administration talk about wanting to refill the strategic petroleum reserves, and also Trump talking that he would refill the oil reserves as well. So again, additional demand on oil, and we saw oil prices bounce up over 75. Talked about jobless claims, natural gas storage up, but a little less than expected. Got Fed officials continuing to talk. Now some are changing their tune and saying that they need to cut. Oil rig counts up a little bit. Again, we saw oil prices up a little bit, but total rig count, up a little bit as well. So again, higher oil prices, rig counts up a little bit, more supply. Look at the rest of the calendar for next week. So again, not a lot Monday, some bond auctions, got an OPEC reports that might impact oil again. And we talked about PPI data on Tuesday, got mortgage data and CPI on Wednesday. So this will be a major volatility catalyst that comes out if inflation's higher than expected. Again, that would be very negative for the market. If it's calming down, cooling off, that would be a positive. Higher probability of rate cuts sooner. Thursday, again, we've got jobless claims data, retail sales for July. So we heard a little bit of weakness out of Amazon. So we'll hear if the retail sector is slowing down, consumer spending slowing down, what that might say for back to school shopping, going into the holidays. Again, Fed officials talking. Got building housing data and Michigan sentiment on Friday. So again, plenty of potential catalysts for further volatility in the market. Also, we're past most of the Mag 7 for earnings. We do have NVIDIA still for the 22nd. But again, most of the Mag 7 are done, but you should look through the earnings calendar and see if there's any stocks, any sectors that might impact your trading. So you can see the whole earnings calendar. We've got some banks, some foreign banks, some gold might impact some of the gold miner stocks. So again, you can go through the whole list in investing.com. We've seen a lot of volatility around the earnings, also their guidance, also how much they're spending on infrastructure for like AI. So their AI spend is also something that's being considered. And if they're spending more than they're profiting from AI, then that's been a negative for a number of these companies as well. Also, if their spending is lightening up, then the suppliers, semiconductors, etc., may be impacted. So you can hear our strategies for how to make money trading when earnings matter. And again, earnings definitely matter, as well as guidance and spending, CapEx spending. So, okay, welcome Logan Flips. Hope you're doing well. Let me grab a drink and we'll look at the market screen in Webull. Okay, just a quick reminder, if you're not already using Webull, we use Webull for our market analysis, our due diligence, the majority of our trading. And right now you can get up to 75 free fractional shares of stock plus a 7% API for 30 days by opening and funding your account in Webull. If you fund your account with 25K or more, you get 75 free fractional shares of stock. Less than that, you get 20 free fractional shares. You still get the 7% bonus APY for the year, and each of the fractional shares worth $3,000 to $3,000. They're also offering a 5% rate on your idle cash in a cash account, and you can see their bonus APY and a number of other reasons why you should choose Webull. If you'd use our affiliate link in the description box below, you can get all your fractional shares of stock as well as all the other promotions they're offering and help us support our BeachBum trading community, which we greatly appreciate. I'm using the market screen on the online browser version of Webull. I like to use this to do some of our market analysis. So we can see in the histogram of advancers, decliners, although the indices were up for the end of Friday, we actually had more decliners than advancers, and the number of small decliners was significantly more than the number of small advancers. So again, that tells me that it's primarily the Magnificent Seven driving up the indices on Friday. If we look at the net inflow of cash, this is interesting as well. is we see that the NASDAQ ended up negative and then went positive with a little pop at the end of the day, whereas the NYSE was steadily positive and then had a little bit of a drop off at the end of the day on Friday. So again, interesting. We had a net positive inflow in both the NYSE and NASDAQ on Friday. Different than what we'd typically seen in the past. So again, fueling that little bounce on Friday. Just a quick reminder, you can also see the near-term earnings calendar in the calendar section on the market screen in Webull, so you can see who's reporting in the near future, how that might impact your trading. We look at the best performing industries for the week. See some education, semiconductors slightly up. Office, household goods, oil and gas, uranium mostly negative. Real estate most slightly positive, but more negatives. Hotels pretty even. Banking, again, more negatives than positives. Software pretty even. Aerospace pretty balanced. So again, a lot of volatility, a lot of chop, but overall, no strong trend. Fintech, again, all pretty balanced. We look at the ETFs. So right now we've got up, so leverage long on the Qs, Dow up, S&P up, long S&P, again long NASDAQ, down on the VIX. So again, we'll talk about the reaction, that spike in the VIX and then the quick retracement of the VIX. So SVXY leverage short on the VIX. YCL is the leverage long on the yen. Russell down, small caps down. Industries, again, pretty balanced. Utilities, positive. Real estate, positive. Energy, pretty split. Technology, positive. Basic materials, slightly positive. Looks like lithium, copper. Defensives actually a little negative on Friday. So again, we saw that rotation into technology out of some of the defensives. Commodities, so rebound in agricultural products. We'll see several of the cattle, hogs, etc. were down quite a bit. Rebound in aluminum. And agriculture, aluminum. I think that's metals. $25 bonds, zero coupon bonds. So now we'll also look at the futures in FinBiz. Just a quick reminder, you can also now trade futures in Webull. So you can see more details about how you can trade futures in Webull and what their current offers are or have been via the link to the topic in our Discord. You can also find that in the promotions page on Webull. Let me grab a quick drink and then we'll go through the futures in FinBiz. Okay, if we look at the futures in FinBiz, again, we see that, big decline in all the major indices Friday or Thursday, Friday, and then into Monday. And we saw those bounces, and again, high volatility. See all these bounces pretty much right up to the top of the previous candle, trying to fill that gap on Monday. So all the indices kind of bounced back, ended up pretty much flat for the week. Again, trying to fill that gap. So, and several of them, the S&P's got that support at 5,200. Looks like the Nasdaq around 18,000, pretty good support. So we're getting strong bounces at those levels. So again, plenty of opportunities to trade these the volatility short term. So making money trading short term volatility. And again, as you'll see, we have ETFs in our Google Sheet to trade leveraged ETFs to trade both long and short, all the major indices as well as a number of commodities, etc. So again, all the foreign markets, while we see the Russell again came down into that previous area of consolidation and support, bounced up, and not quite filling that gap from Monday. So again, we see these strong oscillations between those support levels and the previous top of the candle, bottom of the candle from last Friday and this Monday. All the foreign markets pretty much followed suit. Again, we had the high volatility in the Nikkei. Again, when we talk about the yen carry trade, we had action from the Bank of Japan. They raised rates, and then, so we got a gap down. I think it halted down and then halted back up on Tuesday. And after the Bank of Japan came out and said, oh, they're not going to raise rates again real soon. So that calmed the Nikkei down a little bit. Again, our topic for this week is, how to make money trading when stock market volatility is back. So Monday we saw that radical spike we'll talk about. And we'll talk about the fact that the VIX futures didn't spike nearly as high as the actual VIX, and then quickly retrace back down to below 20. I kind of expected that 20 to be a support level. So again, the behavior in a number of the ETFs is based on the VIX futures, not the VIX itself, although they should be correlated. Again, we're seeing some disconnection, the VIX spiking up much higher than the VIX futures. So a little bit of a disconnect between that behavior. So important and we'll talk about the ETFs related to the VIX, is to watch the VIX futures and base your entries and exits based on, whatever the ETF is based on, which is typically the VIX futures. Again, we saw oil break back above 75. Now it's got support at 75, probably resistance at 80. Natural gas bounced at 2, so strong support at 2. Probably potentially retest that previous high. We'll see if it trends higher after that. Again, gold broke above 2450, so we'll see if it goes back to try to retest 2500 again. Silver not nearly as strong, got resistance at 28, support at 27, had broken down below 27, regained that, probably get resistance at 28. Copper maybe found a little bit of a short-term bottom, been trending steadily down. Again, we see several of the cattle's really declined, and then potentially some late week bounce. Palladium broke down and then bounced. Corn's still trending down. So again, futures traders, we talked about this for several weeks. When corn finds a bottom, might be an opportunity for a swing there. We are still long wheat. We can see wheat kind of bottom, swung up, tried to break that 550, briefly broke above that, got rejected. I would expect to try to retest that 550. If it breaks above that, then we'll see it retest the previous high, and we'll see if we get a long-term swing back up. Again, we're still long wheat with the WAT ETF. Other commodities bouncing, sugar, coffee. Again, another opportunity to trade volatility is in the bonds. We saw that strong run up, peaked out, got rejected, downtrended pretty strongly back down to, these levels, 122, 112, 113, 108, 109. So again, they retraced, back to where they kind of started the previous run, 3-day run or so. And then it looks like they're bouncing now back up. So again, we've got ETFs in our ETF Google sheet. You can also trade this short-term bond volatility as well for different time frames. So we saw the dollar had broken down below 103 in the mid 102s US DXY, and then bounced back up to probably get resistance at that 103 level. Foreign currencies bounced. Again, we talked about, and we'll talk about the yen carry trade unwinding. So we see that strong appreciation in the yen, then a quick retracement for a couple days. We'll see again if it's going to swing back up. At this point, we're still long the yen using the YCL leverage long ETF that you can again find in our ETF Google sheet. Again, a lot of the other foreign currencies that had been downtrending also rebounded. So again, plenty of opportunities to make money trading if you're a futures trader. Also, we have ETFs related to these currencies, etc. Although again, the risk reward for most of the currency ETFs is not as attractive as potentially trading the futures directly. So welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. So next we're going to jump into our ETF Google sheet. So we saw all these opportunities to trade the volatility in various indices, commodities, foreign currencies, etc. And if you're looking for an ETF, potentially with some leverage to take advantage of those trade ideas, you can find those in our ETFs Google sheet. And our All Access and VIP Patreons can get access to our ETFs Google sheet 24/7. So again, if you have a trade idea, you see some opportunity in the markets, you can jump over to our ETFs Google sheet, find an ETF with whatever leverage or risk reward profile that you'd like, with whatever underlying, and take advantage of either that long or short opportunity. So I'll open that up and I'll grab a quick drink and we'll talk about just some quick updates, and then I'll try to highlight several of the ETFs we have related to trading these various areas of volatility. If anyone else in the chat has particular ones you want to look at, I'll try to catch those and we can look at those as well. Okay, just some quick housekeeping. I removed a couple ETFs, NRGD, NRGU. These are no longer active, so I removed those from our Google sheet. Again, I want to highlight some related to trading volatility. Again, you can find the log and shorts for all the technology components like ARC and SARC, Biotech Lab U, Lab D. I also saw someone mentioning we had a lot of volatility also in Bitcoin. So you can, these are based on the futures of Bitcoin. So you can also find various ETFs to long or short Bitcoin, cryptocurrencies, etc. We do have the spot ETFs, I think, in the research sheet. Again, let me start with some of the strictly volatility ETFs, because we're going to talk about these in more detail as part of our strategy. So if you go to the VIX section, we have a number of ETFs that you can short the VIX, SVXY, SVIX. We saw, a couple-day run-up in UVXY. Also, you can long the VIX with BXX, so you can see the various risk-reward profiles of the various ETFs to long or short the VIX. Again, these are all based on VIX futures, so again, you want to look for tops and bottoms in the VIX futures to determine those entry points. Also talked about the yen, long the yen, leverage long the yen with YCL, short with YCS, or the just straight unleveraged long on the yen is FXL. FXY. Talked about treasuries. So again, you can make money trading various treasury yields, either long or short, with leverage if you want. So TMF is the leverage long on the TLT, TBT or TMB are shorts on the TLT. And you also have TTT, so there's another short. So again, you can trade the volatility, make money trading volatility also in bonds using various ETFs that you can find in our Google Sheet. So someone mentioned Mexico. Also, a lot of the foreign markets were volatile, and we have MEXX, which is just the long. It did have a bounce after breaking down quite a bit. So again, you can find ETFs to also trade various foreign markets in our Google Sheet if they're available. Some have shorts, some don't have shorts. Talked about oil and natural gas. So again, natural gas, oil long, cold short, or UNG, UNL long. We also have ETFs to long and short individual stocks. So you can find several leverage longs for trading individual stocks in our ETFs Google Sheet. And if you don't find it in the main sheet, you can search in the research tab. And again, we'll have a number of single stock ETFs, so you can long or short, Apple, AMD, etc., various other countries, etc. So you can find the direction that you want to trade and the amount of leverage you want to use, and find an ETF to trade accordingly. Again, we have ETFs to leveraged or non to trade all the indices, long or short, Russell, S&P, semiconductors, etc., commodities. So let me just check the chat real quick, see if there's any other I'll leave this up, and we can look at any other ETFs for any other commodities, sectors, etc., that you all want to discuss. Talked about FAS and FAZ earlier, so banks, financial sector, you can find those as well. Look at the performance, risk reward profile, FAS, FAZ, also banks. Okay, let me take a quick drink and let's talk about again our strategy, our trade ideas. How can we make money as the stock market volatility comes back? Okay, again, our topic for this week is how to make money trading as the stock market volatility comes back. And we definitely saw volatility come back to the market this week. On Monday, the VIX itself hit a high of 65.73 pre-market on the 5th. And again, somewhat of a disconnect. The front month futures of the VIX only had a high of 37.10 at that time. So the VIX futures never did spike as high as the actual VIX. There's some backwardation in the VIX futures. So I guess as you go out several more months, they're actually lower, which is interesting. I don't know if like the zero DTE options fueled some of this spike in the VIX. But again, the VIX futures, I thought they would respond and head up further, but we saw a very quick retracement in the VIX futures. SPXY, again, is the short on the VIX. And again, even though we saw a quick retracement of SPXY, we'll talk about SVOL again tomorrow, another short monthly dividend paying ETF that's short the VIX. So again, another way to make money trading the volatility using SVOL. And I have a link to our bonus video that we've recently discussed SVOL, and you can access that via the link in the notes. So the 3-year bottom on the SPXY is 22.53. The low as of June 13th, 22 is 37.10. So if you're looking for entry points and exit points on SPXY, again, these are based on the VIX futures, not on the VIX itself. So again, watch the VIX futures for entries and exits using those long and short ETFs. And again, we've got several to long, UVXY, VXX, etc. Again, if we look at UVXY, it didn't really pop up as high either, so we can briefly look at that in BinBiz as well. So again, even though the VIX itself hit like the highest since like 2022 or so, UVXY didn't even make it to its 52-week high. So again, plenty of potential upside, and you see how quickly it retraced. So again, careful, protect your profits, but if you start to see the VIX futures run, you can get a leveraged long on the VIX futures using UVXY or VXX. But again, it never even made its 52-week high, even though we had that multi-year high of the VIX itself. So we've also got a number of potential catalysts for this continued volatility in the market. So we talked about the yen carry trade unwinding that caused a spike in the yen. There's speculation that caused a decline, part of what fueled the decline in the market, spike in the VIX. And the expectation is that this hasn't fully unwound. So we have potential further unwinds in the yen carry trade. And again, that may spur further volatility. We've also got, global tensions in the Middle East and the Ukraine. So some of those events may cause, again, spikes in volatility. Also, volatility tends to be increased on Mondays over the weekends, digesting whatever news. And again, if we have any particular global events over the weekend, could get some significant spike in volatility on Monday. And again, last Monday is when we saw the previous spike. Also, we've got quite a bit of important economic data coming up this week. We've got the PPI, CPI, jobless claims. So again, if any of those are outside of expectations of the market, those could spur further spikes in the VIX. So again, but again, we saw how quickly those spikes got retraced. So again, you have to be nimble, but opportunities, if you see volatility, particularly the VIX futures take off, you can long with UVXY, VXX, short with SVXY or S-ball. Again, also we've got earnings reports. So again, if we hear a significant miss, particularly in a bigger company, again, we don't have NVIDIA till the 22nd, but several others, could cause some turmoil in particular sectors. So you might look for volatility in particular sectors. Also, again, we've got the elections coming up. It tends to be a cause for elevated volatility. So my expectation would be that we would have higher volatility going into the elections, and then a decrease, once those are resolved. So again, plenty of potential catalysts for future volatility. We'll just have to see what hits and when, and be ready to respond accordingly. So again, I hope this all helps you have a trade plan, have some ideas of how to trade long or short the volatility, and be able to make money trading again as stock market volatility comes back. Got a number of videos about more information about volatility, the VIX, etc., comparing various ETFs to long or short volatility. So again, you can reference those further videos via the links in the notes. Also, with the increase in volatility, we got increased implied volatility and options, so that makes the options premium more attractive. If you're not familiar with how the applied volatility works and how that affects options, you can reference that video in our notes. Also, a message we always try to send, even though the VIX, which they call the fear gauge, spiked on Monday. BeachBum traders, don't panic. We've had previous discussions, don't panic, don't overreact, even though, again, I think the fear gauge itself hit extreme fear with that spike in the VIX. Don't panic, don't pull your money out, don't leave the market just because fear is increasing. That could be an opportunity. Buffett says, be greedy when others are fearful. And there's also the Rothschild quote that we've used before is, buy when there's blood in the streets. So these high volatility opportunities may be good opportunities to be greedy, and again, buy when there's blood in the streets. So I hope that all helps. Again, love to hear your ideas. What other ideas do you have about how to make money trading as the stock market volatility comes back? And again, in my humble opinion, I expect us to get continued volatility and, some possible extremes if any of these further catalysts trigger. Also, we've talked about how trading historically is in August. August tends to be a pretty flat month. Potential, high volatility, up and down, but generally flat. Again, we saw the indices were ultimately flat for the week, even though we had this extreme spike in volatility. So you can reference our previous videos on trading in August, typical markets and sectors, also how to take advantage of any back-to-school sale in the stock market. So again, when we see those extreme downside moves, that may be your opportunity to scoop up something on your shopping list. And we'll also talk about that again tomorrow. Also got videos on the trends, historical trends, and how to trade the stock market doldrums for the summer, etc. So you can hear how the overall performance of the market tends to be in the summer. So tomorrow we'll also talk about how we can use dividend-paying stocks and option strategies to make money trading as stock market volatility comes back and in general. So let me grab a quick drink and see if there's any outstanding questions or topics you all want to discuss or any ETFs you want to look at, and we can talk about those. Okay, again, if anyone in the chat has a particular topic or ETF or you want to talk about or any questions, please let us know. Just a quick public service note is tomorrow, normally we do part 2 of our weekly trading game plans at 10 a.m. on Sundays. I will be out of town early tomorrow, so I don't know at what time I'll be able to do part 2 of our weekly trading game plan for this week. Tomorrow I might be able to do it in the evening, so I hope that you are subscribed, and please hit the bell icon with all notifications, and so when I'm able to schedule part 2 tomorrow, you will be notified. Again, it probably will not, it may be, but probably will not be at our normal 10 a.m. time, possibly in the evening. So again, as soon as I'm able to do that, I will schedule part 2. And again, in part 2, we'll take all of this market analysis, all these trade ideas, and we'll come up with our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Again, we'll talk about how we can also use dividend payers and option strategies to make money trading, again, as stock market volatility comes back. Again, we hope you like this content. We hope you'll smash the like button, help the YouTube algorithm show us some love sometime. And again, we really need your help with directly sharing our content with your fellow traders and friends. Invite them to join us in the chat, join us in the Discord. Again, we'd love to have you join us in the Discord. We can continue these discussions 24/7 in our Discord. Again, our Discord's free to join. You can find a link in our notes as well as in the description box below. We also would love to hear your feedback on what we can do to improve our weekly trading game plans, any other video content, our tools, our Google Sheets, etc., our community. Again, you can put those in the comments to the video, and we have a suggestion box in our Discord, and you can also contact us via any links to our social media sites, which you can find on our homepage, BeachBumTrading.com, in the links section. Again, multiple ways you can let us know what you think of our content, our tools, community, etc., and what we can do to improve. So again, I greatly appreciate that. And again, please hit the bell notification, all notifications, and as soon as I'm able to schedule part 2, hopefully tomorrow, I'll go ahead and schedule that. You should get notified. So I hope this all helps, and good luck and have a great rest of your day.